the $1 Million Mortgage Experience Podcast. All right, welcome to today's podcast. I'm here with Alejandro Szita. He's been involved with real estate and loans since 2006. He specializes in serving artists and entrepreneurs as he expertly maneuvers the ins and outs of mortgages for self-employed borrowers. Thanks for coming on.
John, thank you so much for having me back.
Yes,
Pleasure
good to have you
here.
back. I think it's, what was it, a couple of years ago or a year ago maybe?
Maybe, yes.
Yeah, time's flying, right?
Oh my God.
And I think we were in like the beginning of the interest rate apocalypse.
Yes.
And business had slowed down and you were doing some really cool, unique things. You'd done some loans for some celebrities, right? And
yes.
Some artists. And, we specialize in big jumbo loans and the out-of-the-box creative type of loans that you send us. And so it's a good fit, for I think what you're doing. And just wanted to have you back and talk more about what you're doing now to get business and what you're doing now to enhance your mortgage broker shop.
Thank you. We love dealing with self-employed people and entrepreneurs. This has been what we've always done since the very beginning.
Yep.
Not that we would not do a W-2 employee, and we've done them, and our record has been 11 days from application to closing.
That's quick.
Yes, but we focus basically on the entrepreneur.
That's great.
And, I am an entrepreneur myself. I grew on a family of entrepreneurs. So for me, there was never any other choice in my mind.
Mm-hmm. That's good. Do you get just naturally like founders that just find you through your marketing, or how does that happen?
At the beginning, it was very tough because we tried different methods. We tried buying leads. We tried doing the SEO work.
Right.
And then if you're in this business, I'm sure that your inbox gets flooded with offers for AI, the AI is going to solve anything. And after spending a bunch of money, a bunch of time, for us, I'm not saying that this might not work for other people, but for us, the only thing that really worked was meeting face-to-face, talking to people on the phone, but really talking to people on the phone, not so much reading like a script.
Yeah.
And again, I'm not saying that the scripts don't work, but having
personal.
a real conversation over the phone, having really face-to-face meetings, then doing the impossible to deliver the loan, with the best possible quality, timing, and experience. And that starts to produce referrals.
Right.
That is like the old-fashioned, you might say, old-fashioned type of way of doing it. But I haven't found, and if you know any other way, please tell me, but I haven't found any other way to do that. And it's old-fashioned, it's a little bit slow because you have to build your how can I say, your client base.
Right.
But then after your client base has like a certain size, it starts to work by itself.
Sure.
Now we get calls, every day I get a call from someone.
Right.
And it's really incredible how the person found out about us.
That's cool.
We still do blogs, we still do podcasts like this one that we're doing. We send promotion and so on. But what has worked the most is this.
Yeah. What makes it interesting for you to work with self-employed borrowers? Like why? Why do you like to do it?
Because I would say of a personal experience. I remember when I came to this country in the 90s, my first loan, even though it was not a real estate loan, I just wanted to buy a vehicle. And I remember this experience of trying to buy a vehicle. It was a nightmare. I submitted my application. It was denied. So then I called the salesperson at the car dealership. Why was denied? Oh, it's because you didn't say this. Oh, but I have that. Okay, let me call you back. It was denied again. Why? Oh, because you didn't do this. So after like 5 or 6 of these phone calls, I finally got approved. And I thought that was an exception. Maybe it's because I was a foreign guy. Maybe it's because I had an accent. But then I found out that if you're a self-employed person, that is the type of barriers that you might encounter.
Yeah.
Now, that was in the 1990s. Today, in 2024, the experience might be a little bit better. But if you are a self-employed person, the system is not built for you.
Right.
If you're a W-2 employee, then the system works beautifully for you.
Yeah. Automated and quick.
11 days, like I said, we closed a W-2 employee in 11 days,
Yeah.
So it's magic if you're a W-2 employee.
Yeah. I think for me, it was interesting to just have a challenge because I never wanted to do loans that were just like assembly line. It just didn't, it was no personal touch. People were kind of thankless with you. They didn't really appreciate, it was just like a transaction. It wasn't like, and when you do a loan for an entrepreneur or for a founder, you're really able to create a relationship. And then because you take the time to do that, you're going to have give them a great experience. And also that opens up the doors for all those referrals you were talking about.
Yeah. And it's also more challenging because many times to make the loan work, you have to prod a little deeper into the entrepreneur.
Yes.
You have to be really aware of his financial situation. And that opens the door to moving things around. And that becomes very challenging, but very rewarding in my experience.
Yeah, it is rewarding. And it's more interesting, right? It's like you're doing something has some creativity to it,
Yes.
and you have to use your brain. You have to think. You can't just put it into a system and, have it approve it automatically and based on whatever, is on the application. You have to think this person definitely deserves a loan because they have the money. They've got a good, decent credit score. They're going to put a good down payment down. They're going to pay, 99% of the time or more. There's always those odd ones that, for some reason they buy a $10 million house and they put $5 million down and then they stop paying. You're like, how did that happen? Doesn't seem, logical, but most of the time they pay. And yeah, they have something interesting about them, whether it's the way they make money, which is always fascinating to me. I like to see how people make money. And you get to see all these really cool different businesses that people do and, and how they create money out of nothing, which is very interesting.
What you said, you just read my mind. When I do a loan to those people, I learned. It's not just me being like a service provider. Right. I'm also listening and I'm also learning how they make their money. It's incredible, like you said, how people create money out of thin air.
Yeah.
And then to me, what is the most incredible thing of all is that here you have a guy that, like you said, is going to put a substantial down payment.
Right.
Like you said, has a business, has the means.
Yep.
However, when he knocks the door on the traditional loans, he's finding his life,
Yeah, they're saying no, sorry. And you're like, why is that? But that gives us a job, right? Gives us ability to do something in the market, but yeah, I think it makes day-to-day. I mean, you got to trade your hours for money. You got to go to work. You got to create money and income for your family and your business, and might as well do it with interesting people.
Yes,
right?
I completely agree.
Yeah. So do you mostly do bank statement loans, or are you doing more P&L loans? What are kind of your sweet spots now?
We've done a few P&L loans through you, and those P&L loans to me are like magic. To me, the P&L loan is the dream of the self-employed.
Yep.
It has to be a self-employed person that is already that has some degree of establishment.
Yeah.
Because
he has be like a brand new founder. Or
it cannot be a new founder. You have to have, or the person has to have their basics in. His company has to be registered.
Yep.
He has to be updated. All the fees. He has to have a CPA. But for the business owner who's been in business for a few years, with his basics in, with a professional accountant and professional accounting, the P&L is like a gift from God.
Yeah.
Because all you have to do, this is the loan that the self-employed has been looking for.
Right.
Because when you talk to them, they say, well, I make money. How come I cannot get a loan?
Yeah.
With the P&L, all they have to do is just ask their accountant to do a printout.
Yeah.
And pretty much, unless the credit is really bad, the loan is done.
Yep. That's
so
true.
I love P&Ls. Through you, we did almost a $4 million loan through P&Ls. It was magic because I know this customer. This was my first customer. I've known him for almost 20 years.
Oh, wow.
And I met him here in San Diego, believe it or not. And the problem that he always had is because he has many businesses. He has many streams of income. And his business model for a traditional lender is also hard to understand because of the service that he delivers. All of that.
What kind of service is it?
He provides assistance to children and young people that have problems, like psychological problems. He works for the state. He supplies services for the state, and he also for private individuals and through insurance companies. but his business model is difficult to describe. Not to you, I mean, you got it right away, but to a traditional lender, it's difficult to describe. So we always had this problem of tax return. You know, his return is 200 pages long. You said bank statement. He has like 12 bank accounts. So which one and why this one and not the other? So the P&L cut through all of that. Simplifies
it. Yeah, it makes it cut and dry and easy to do it.
Yeah, so I love the P&L. And for the entrepreneur that is not 100% established, or the bank statement works like a charm.
Yeah, because they can be fairly new business, a founder, and they've got bank income, showing deposits, and it just helps them qualify as well. I mean,
and the other one that is my favorite that I always tell my clients about is the DSCR. Because the DSCR, in my opinion, is another loan, another gift from God. Because even if the house is vacant, what to me is amazing, even if the house is vacant, providing the appraiser comes up with a reasonable rent estimate and providing your down payment is such that the property breaks even.
Right.
And when I say property breaks even, in the commercial world, break even is not a given because it's not just paying taxes and insurance. You also have to have a reserve.
Right.
You also have to have a capital expense account and blah, blah, blah.
Yep.
But in the residential world, break even only means principal, interest, taxes, and insurance.
Right.
So as long as the rent covers that, even if the property is vacant, and your credit and the credit of the borrower is somewhat decent, the loan is done.
Done. Super easy, and they're quick.
Yeah, that's another, in my opinion, magical loan.
Yeah, that's great, and it makes sense because the property pays for the mortgage, so it's a very easy loan to credit risk underwrite because the credit risk is there. It's like if this borrower doesn't work out and we have to take the property back, the property actually will cover its payments. And most of the time, they're never going to let that happen, because the down payment's it's substantial enough to make that DSCR over greater than 1, especially with the interest rates now, right? It's a little more difficult to do a DSCR and make it over 1%, the coverage over 1% of the payment. Have you found that to be more difficult, like on the DSCR loans? But a lot of people have equity, so it's on a purchase, it's tough. But like if someone has plenty of equity and the rents, and they've had the property for some time, usually the rents have gone up, and then they can do it and it'll cover it.
Yeah, on the purchases that we've done, because of the profile of the customer, meaning a self-employed or business owner. Yeah, there have been a little bit of not resistance, but question. Why do I have to put so much down? Because I've noticed so far that even though you don't have to put 30% down, at the 30% price, at the 30% range, because of Southern California and even Northern California, prices and rents, at 30% it starts to balance out that the ratio becomes more than 1.
Right.
And they say, well, can I put less? And I say, yes, you can. But then everything is going to be more expensive. You're going to be under 1. And yes, we can get you the loan, but this and this is going to happen.
Yeah.
And everybody chose so far. They chose, let me put a bit more down, get a lower rate.
Yep.
And so on.
That's good. Yeah, those are good loans. So you're in your portfolio of all the loans you're doing, what's the percentage of bank statement versus DSCR are you doing?
I would say that right now it's 50-50.
Okay. Yeah. And you're doing in different states or just California?
California and Florida.
Okay. Yeah, great. 2 great states to do DSCR for sure.
Yes.
A lot of rentals, a lot of Airbnb. What do you think of the Airbnb market right now? I mean, I know in some markets it's a little saturated maybe, but are you seeing people still buying Airbnbs? And some of the Airbnb, like the cities are cracking down on making sure people have licenses, and you have to have a special permit, right, to have a property.
I see that potential investors or even borrowers, because of the hype and publicity of the Airbnb, are very attractive to them.
Yeah.
We have, and I know that you have a program. Actually, FundLoans has a program where you would consider either, I think, 80% or 70% of the Airbnb rental, and use that as qualifying, which I think is amazing.
Right. Because it's real income. It's real money. It's...
Yeah. But I think an Airbnb, my opinion, personal opinion, I think is risky. Because yes, Airbnb in some areas, that's fine. and it can be a good source of income. But like anything else, especially in real estate, you really have to manage it.
Yeah.
You really have to know what property, what market. You really have to be on top of things.
Yep.
It's not something that you can do on the side, in my opinion. It's not something that you can do on the side and expect to work.
Right. You got to have someone that knows what they're doing.
Yeah.
Yeah. What about the interest rates now? Are you seeing people push back on, rates in the 8s and 9s? I mean, they're higher, right? But are people finally starting to get used to, what that rate is, and they're kind of accepting it?
If you're a little bit older like us, or like me, not you.
I'm up there. I'm over 50.
Then it's not a surprise.
Yeah.
For younger people that grew up, in the 2s and the 3s, this seems like something abnormal.
Yeah.
Now, I don't know if you noticed, but now, for the last 2 or 3 weeks, they've come down by about a point. Especially on the W-2 loan for employees.
Right.
And the trend, I always tell my customers, the trend is up for many reasons.
Yeah.
So people still have the perception, this is what I've seen, people still have the perception that rates are a little high.
Yeah.
And they should come low.
Yeah.
And that's a conversation really that I try not to have with people anymore. Because unless you tell people that rates are going to come down, even if it's a lie, in my opinion, borrowers don't want to have this conversation. Because when they read the news, when they see, the official news at least, that the Fed is going to lower it down, they don't want to hear that is not going to happen. So I try to avoid that conversation, not to be antagonistic with the customer, and I just try to concentrate on the positives on the transaction for the person, for the borrower, regardless of the rate, regardless if it's 7 or 7.5 or 7.2, 7.3. I always try to when I talk to my borrower, my first question is, why do you want the loan? Yeah, which is unusual.
That's a great question.
I want to know why. And they say, well, because I want the money. Yeah, but what do you want the money for?
Yep.
Because in some cases, they are better off not doing the loan. And when that is the case, I tell them. Once I know the real motivation, the real reason, then it becomes clear in my head that even if it's 7.5, 7.4, 7.3, 7.1, or 7.6, to him or her, it doesn't matter.
It doesn't matter.
And I try to concentrate on that.
Yeah. It's a really good point, because people really need the money to accomplish what they're trying to accomplish, which is maybe they want to own a bunch of real estate, and this is a tool for them to accomplish that.
Yeah, or a business owner. That $4 million loan that we did is because the business owner had a really, really, really high interest loan. Yeah. So even a couple of points made a huge difference to him. So he of course wanted the lowest rate, but in his case, he didn't care because anything that I told him was substantially lower. Yeah.
And a lot of people do start out, especially on like DSCR, they'll get a hard money loan, and it's up in the 10s or 11s or 12s, and they're very thankful to get in the 8s, and not have a balloon come due and have to worry about that, so.
But let me say that as of the date of this podcast, if your credit is in the 740s, more or less, with you can get about 6.6 on your DSCR loans. I
got to raise my rates. No, that's...
so if you're at 12...
If the LTV is low enough and the FICO is high enough,
so if you're at 12 right now, you could be
in the 6s.
Almost half.
Yeah, true. And they pay interest only, which is a beautiful thing, too. As we know with inflation and how the dollar, it's not really the dollar, it's just inflation in general globally. Debt becomes cheaper to pay later. So, you can push that off down the road. When you've had a property 10, 15 years and you've had appreciation, and then now that mortgage, that seemed big 10, 15 years ago is now, it's a lot easier to manage, or it's a lot easier to pay off because, the dollar and, just the overall inflation has made it easier for you to pay off. That's why I always love leverage and getting a mortgage, because mortgages become easier to pay off as time goes on.
And this is so true. I have never spoken to a customer, or let's phrase it in the positive. Every single customer that I've spoken to over the years who have bought a house, always have said to me, when I took the initial mortgage, I didn't know if I could pay it.
Yeah.
I was at the limit of what I could afford.
Right.
That is like, I would say 99.9% of the experience. And after a few years, like you said, even though the number doesn't change, it's the same mortgage, it's the same rate, if it's a fixed rate, it becomes easier and easier to pay because of the devaluation of the currency.
Right. And then you can play the interest rate game when rates come down. You can refi, and it's a beautiful thing. And if you understand that, I think that's the biggest issue is the young people, they don't understand that principle of how that works. And so buying assets instead of just saving your money, but if you're putting it into an investment like a real estate investment, you're going to have that appreciation, and you're going to have that ability to pay that mortgage down even better as time goes on. And that's something that people need to understand, so they can take advantage of that and really grow wealth and become, build their empire, build their, that's how you create wealth. I don't know how much investment properties you have, but I know for me, when I put my money into investment properties, it's changed my world, changed my life, changed my future, changed the way that I think my kids will inherit, property down the road when I'm gone, and give them an advantage, right, over what other people who didn't make those decisions early on in their life.
Yes, I fully agree with you.
Yeah, it's so true. So you're doing DSCR about half, you're doing bank statements about half, P&Ls. What can you give us any examples of a loan you did recently that was a good outcome for a borrower?
Yes, although this is a little bit different. We had an artist in Laguna Canyon Road. This is over in Laguna Beach.
Okay.
He bought a property that sits on a commercial zoning, and therefore he got a commercial loan. Mm-hmm. Commercial loans are variable for the most part,
right? And
his loan is variable, or was variable. When we started talking, he was paying around 10%. That was an SBA loan, by the way.
Yep.
And then he said, Alejandro, can you refinance this loan? I want to lower my payment. And I started to look at it, and I said, well, I don't think so. This is a commercial property. If I get you another commercial loan, it's not going to be any better. It's going to also, we can do it because we do a small balance commercial loans. Mm-hmm. I can get you another one. Maybe I can save you 1 or 2%, but for the costs of the transaction, and now you need to get a commercial appraisal. A commercial appraisal Expensive. Is thousands of dollars. Yeah. So once you add up what it's going to cost you to save 1 or 1.5%, it's not even going to cover your expenses.
Right.
And then in this case, because I'm a real estate guy, I am a real estate broker, and I did traditional real estate for many, many years. Mm-hmm. Just I got curious, and I do this with all my customers. I started to look at the property records. I started to look at the public record. I pulled a full title profile, and I started to read the documents underlying it. I ordered a preliminary title report, mm-hmm. and I went deep into the type of property, and I found that the city of Laguna Beach had granted an artist's residential use for that particular building. There were 4 units in this sort of office condo. This is how it was technically on the records, office condo.
Okay.
So I just had an idea. I said, well, maybe I can talk to a lender and say, hey, this sits on a commercial zone, but it has an officially granted residential use if you're an artist. Mm. And then the city had a procedure where you could apply and obtain an artist license. And I asked him, could you please do that? He said, no way, I'm not going to do that. I said, why not? Because he's a famous artist. Okay. He says, I've been an artist for 40 years. Big discussion.
Yeah.
Eventually I convinced him. He went to the city, filled out the paperwork. He obtained an artist certificate.
For residential use.
With that, I went to 6 lenders. They all said no. Now, I was going to tell him, we can't do this.
Yeah.
I tried one more lender. They said yes, by mistake. So it continued to go up the line, underwriting, until it hit the actual the underwriter that looks at the collateral. They call it, in that lender, they call it the collateral department.
Okay.
So this lady sends me an email this big from the collateral department. All the reasons why they should have never looked at it, and this loan was not going to be done.
Wow.
So this is what I did. I took her email, attached everything from the city, everything from title, showing on the property was. I found this later, by the way. At the time, I didn't know. I thought this was no, and it was like, no way this could be done.
Right.
Then later on, somebody at that lender told me that after I sent that information, they had a huge discussion
in the credit committee, probably.
Yeah, and the writers, the credit committee, the collateral department. It went on for hours. And they decided that I was right.
You were right.
Because I also quoted from the Fannie Mae or the Freddie Mac manual, 1,200 pages, by the way.
Wow.
But I looked at all of the reference for mixed-use properties. And to make a long story short, they said yes.
It sounds like you went above and beyond. Like you did way more than most people would do to get this deal done. Which is very admirable. I mean,
thank you. But we do that with every single loan.
Yeah, that's cool.
Every single loan. Because one of the things that we do first, or that I personally do and I train my people to do, is like when somebody calls you, don't ask for any information, just listen.
Yeah.
Listen.
Ask questions.
Because if the story doesn't make sense by you just listening, why bother asking for W-2s, tax returns, running credit? You already know that there is no loan there.
Right. Yeah.
But if you listen and it looks like there is a loan, then ask for 2 or 3 things, because borrowers don't like, if you send to a borrower a laundry list of what you need on a first contact, he's never going to call you back.
Right.
So just ask for 2 or 3 things that confirm some key elements of the story.
Right.
And if you get those things, you look at them, the story makes sense, these 2 or 3 things make sense, then start investing the time.
Right, right. Yeah, because you're not wasting your time, you're not wasting their time.
Exactly.
And they appreciate that.
Exactly.
Yeah, and then maybe they'll come back to you and use you or tell someone about you, right?
Correct.
And I think it comes down to you are experienced, you know what you're doing, you've done a lot of homework, you've have had a lot of loans that you've gone through, and you know the ones that you've gone down that path and they've turned out to not work and you wasted time. So that wisdom of just knowing and being a authority in the mortgage world, right? Like you're able to do that.
Thank you. But another thing that I would say is that even if the person doesn't qualify for the loan, you see that the loan, it's like oil that needs another 10,000 years to actually mature. You see that there could be a loan in the future, but not right now.
Right.
I never want to leave a borrower like hanging. I said, look, right now, this is not going to work, but do this, this, and this, and this. And if you want, I can help you. And I'm not going to charge you for that.
Right.
Then 2-3 months from now, you will qualify for the loan.
Yeah.
And some people take you up on it, some don't.
Yeah. And you hope they don't take what you told them and then go somewhere else, right? That's not fun. But,
you know what we do or what I do to avoid that? That's a very good question. I try to give the person so much value up front. Yeah. So much value that in my opinion, it will be very difficult to anybody to match it. This is how I hope, and so far it has worked, that the person will come back to me versus come back to another broker. Yeah,
that's good. That's really good. Talk about asset only or asset-based loans. Because that's another product that's magic.
Yeah, that's another loan that is magic. I wish I had known about this product before. Yeah, it would have helped me with another artist that I had a few years ago. Mm-hmm. He wanted to buy a townhouse, sort of townhouse PUD type of property. Yeah. Amazing in Los Angeles. And the price was like 1.4. He had $2 million on his account. That
he could have paid cash, but he doesn't want to give up all his money.
Yeah. He was an entrepreneur, an artist entrepreneur in the fashion world. Yeah. So he told me, Alejandro, I don't want to use all my money just to buy this. I want to have... Yeah. So that loan would have been beautiful.
Perfect, yeah.
But I was ignorant of the product. I didn't know it. We did it with bank statements. Through you. He still got a good deal. Yep. But the assets only, it's amazing.
It would have been easy.
It would have been super easy because as long as you have the purchase price, closing cost, and $1, then the loan is done. Now, when I talked to one of your account executives, Shane, and he explained me the rationale behind, I thought it was brilliant. Yep. Because according to the CFPB, you have to be able to afford the loan, right?
Yeah, the ability to repay.
And the ability to repay. Well, if you have all the money...
You have the ability to repay.
You have the ability to repay, right?
You really do, yeah. Yeah, that's a beautiful product. I mean, I think especially for founders too, if they have, pulled in, raised money and they have that money in their account, it's beautiful because then they can afford to get. And as long as they own the company 100%, or even if they don't, they can use the percentage of that money to qualify. So it's a great product. But so talk more about the artist thing. How'd you get into working with artists?
For two reasons. One, I think that artists exemplify the hardest to qualify business owner.
Yeah.
Because artists have variable income.
Yep.
They do have income, but it's very variable. You have a lot, then you have little.
Yep.
Artists on paper don't appear to have a consistency that lenders are looking, consistency of work.
It's hard to understand how they make money, and like, is it going to continue, right?
Exactly. Is it going to continue? Artists are literally always on a commission. There is no salary for an artist.
Yeah.
Also, the assets that the artist may have are in works of art.
Yeah.
So on paper, sometimes they don't even know they can list those assets, but on paper, it shows that they don't have assets. So imagine, from a lender's perspective, you have a guy with a variable income.
Yep.
That happens maybe to be on the throne. That's why he's applying for the loan, right?
Yeah. Otherwise, you don't usually get loans when you don't need them.
Exactly.
You get them when you need them.
Then you as a lender, what is he, an artist? What is he doing? Maybe you don't even understand what the type of, or maybe you personally as the lender disagrees. You can disagree with the type of art he makes.
Right.
But that doesn't matter because he still sells it. He still has a niche audience that is paying for it.
Right.
So it becomes very subjective. That's one reason that I love artist clients, because nobody understands them.
Yeah.
Number two, my wife is an artist.
Okay.
And that introduced me to the world of the music industry, because she's an artist in the musical sense.
Okay.
And that introduced me to a bunch of people in the music industry. Now, this other artist, which we did a loan in Laguna Beach.
Yep.
He's not in the music business. He's in the sculpture business.
Yep.
He makes these huge, gigantic, the size of these room sculptures.
Wow.
So that's different. But I noticed that all artists have this similar problem when it comes to lending.
Yeah, true. Banks don't want to take the time to really understand it, and unless they're like really famous artists. Like if you have a bunch of money in a city private client, account, and then they can see your bank and they can kind of make sense of it, but they usually don't at that level. They usually don't want to do a loan for $2 million. They want to do it. They prefer to do bigger loans. And you have to actually have more assets to be part of that private client group. One of my favorite referral sources has always been the private client groups, because one of I don't do loans as much anymore, but when I did, this particular person that would refer me these loans, she would do loans on art. She would do loans on planes and yachts, and she would, like a sculpture, but as sometimes collateral, they would use, like a famous painting. They give you like $10 million on a $30 million painting, that kind of thing. Mm-hmm. But they would always have like a portion of their customers, their clients they kind of just below that threshold, and they didn't have enough money with them to become a private client with their bank. And so she would refer to me, even though, especially, and I would love to say to the private client people, when I wanted to get referrals from them, is I'm non-depository. So I'm a lender, but I'm not a bank. So you can give me your customer and they're not going to take their money out of your bank. I'm going to give them a loan. You get to keep them as a customer. And that way you're not harming your bank by referring them to me, and then on the flip side is, they might go over to a place like when First Republic was around, and they would make those loans in that little space, right? They would do it. So it would then, if they moved over to First Republic, they would take all their money out of the private client with them. And so it was an easy way for me to just approach the private client group and say, we're non-depository. I'm not going to compete against you, and I can help your customer. And they would just be thrilled with that. And so then sure. And then they just start referring me business, and it was beautiful. But I like that. So your wife's an artist in the musical sense.
Yes. And
she's in a community of people that are also artists or musicians, right?
That is correct.
And they create music. And that's great, because, my daughter's getting into that world. She's a songwriter and a singer, and she's just signed a deal with a producer, and she's going off to college and to major in songwriting. And, she's going to be around a bunch of songwriters, a bunch of producers, a bunch of musicians that have that income that's very variable. And I think people that are listening who also want to get into that kind of lending, it's a beautiful, and there's a lot of loans to go around. So and a lot of people don't, unfortunately, take the advice that we give on this podcast. They listen to it and they go, oh, that's a great idea. I'm going to do that. But then they never do it, right? And so I always, never felt bad about just giving away ideas.
I would say that take the advice that resonates with you.
Yeah.
Because we're talking about a bunch of things. But out of the bunch of things, maybe be one, hopefully, that resonates. And if you see yourself doing it, do it.
Yeah.
Because it has happened to me too, that sometimes I listen to some advice and I think, wow, that's a great idea. That's a money-making idea. But for me, it doesn't work.
Yeah.
Because I'm not putting my soul into it. I'm not putting, for some reason for me, it doesn't work. Not because it's a bad idea, not because it's a bad advice.
You just don't have the passion behind it to make it go through. And it's hard. I mean, if it was easy, everyone would do it, right? Yeah. So if it resonates with you and you can have the passion behind it, it makes it that much more doable and fun when you're doing it.
Yes.
So do you have any examples of any, you don't have to name names, but some famous musicians or artists that you've done?
Yes. We've done one of the, I would say is the most renowned bass player in the world.
Wow.
Even at that level.
Yeah.
We're not talking about the private banking relationship.
Yeah.
So the distance between somebody that is good and the distance between underneath the private banking relationship is huge.
Massive, yeah.
It's massive, right?
Yeah.
But he actually is coming up with his new record, and thanks to you, because we did a loan through you.
You got him cash?
Yeah, thanks to you, we pulled up enough cash from his home equity to produce his next new record that is coming back now in August, I believe.
You got to give me a copy of it.
Yes, for sure. I'll get you a copy.
Or I can go buy one.
No, you deserve it. You deserve it.
Signed copy.
You deserve it because it was thanks to you.
Let me get a signed copy. It would be cool.
Yes.
I love to save knicknacks and put them in my podcast room in my office and stuff.
Yes. And that's an example of a very, very successful artist who is touring. He still does touring. Mm-hmm. So when you look at the income, every time he goes on a tour, it's huge. When he's not touring, it's different.
Right. And bankers don't like that. They don't like that income fluctuation and stuff. So that's why non-QM is so great. I love non-QM loans. Yeah. And you're always going to have something new and different, right? Like the bass player, I'm sure that was one of many other examples you could give where you found someone and they made their money totally different. They had a whole different story, but a bank wouldn't lend to them, but non-QM does. So
yeah, not only that, I can tell you one brief story of a loan that we did through you, whereby the client, in this case, he's not an artist. He's a family. They have a construction company. They've had this construction company forever, by the way, I believe 30 years.
Okay.
They're really good at what they do. But for some technical issues on the appraisal, so it's not that they don't have the money. It's not that they cannot afford the monthly payment. It's not that they don't have the credit. The credit is huge. It's beautiful. Mm-hmm. But for some technical reason on the appraisal, nobody wanted to do the loan.
Was it rural or what was the...
Well, this is very interesting. It appeared to be rural from the pictures. But once you drove around, and I know that because my wife drove to their location, it so happens that location is full of high-end homes in a sort of a rural setting. But this is not rural. This is high-end rural.
With some acreage or...
Yeah. It's in Riverside County.
Okay.
But it's urban, high density by sort of rural high end.
Yeah.
But the pictures that the appraiser took don't make it look this way.
Those appraisers.
And you
think
did it.
Appraisers would finally start taking good photos.
Yes.
They don't take good photos.
Yes.
And you're like, the comps look great because they're all from the MLS with professional photography, and then your property looks like crap.
I know. And then I was discussing with Shane. Shane is my account executive. And I said, Shane, but how is this possible? And Shane, he's very creative too and very open-minded. He said, you're right. There is a deal here to be made. Let me pitch it.
Yeah.
And
I probably saw it in credit committee and I probably proved it. But
okay. Yeah, probably you did it. And then he pitched it and he said, okay, we'll do it, but we have to charge more. We have to charge more because the same problem that we have, We had other people, our investors are going to have it too. So we need to have this number.
Yep.
It was a hard sell.
It was like a quarter hit to the rate, or what was it?
No, it was like a whole point.
Oh, wow. Okay.
But I just talked to the board and said, look, I pitched this loan already to 6 lenders. They all said no. And this is the thing that you need to fix. I told them, in the future, just fix this, and then it's just going to fly. But at the moment, this is what we can do.
Yeah.
So with your help, we were able to do it.
That's great. What are your thoughts on helping brokers in this market? You know, what would you tell a broker who's kind of struggling? You know, I've talked to brokers like you who are doing well. You know, maybe they're not doing obviously as good as they did in 21, but some brokers are having a tough time now because there's just not enough. There's not enough business out there, and I mean, a lot of loan officers quit and went on to do other jobs.
Yes.
So there's less loan officers, of course, but there's also way less deals out there, like way less purchases, because just year over year, the numbers are down on listings. You know, there's just very few transactions happening. So what would your advice be to a mortgage broker that is sort of just listening to this podcast and saying, what can I do? What's a great strategy? This
is what we have done. This is the only thing that has worked for us. After a few years in the mortgage business, you know, if you're new and you're listening to this, you still need, in my opinion, if I was starting the mortgage business today, I would do the same thing, but it would be harder.
Yeah.
If you've been in business for a few years, you already have a customer base.
Yep.
What has worked for us is the complete opposite of the advice that you get through emails. Because every day I get all of these solicitations from AI, SEO, you know, hire me, you know, I'll get you leads, or you know, while we work on commission, I will promise you that you have 20 calls a day or whatever.
Yep.
You have to do the complete opposite. You have to go to your customer base, and this is what we've done. Sounds simple, but it works. We have everyone's birthday now on a database. We send a physical birthday card that I bother to write myself and sign. We have an actual magazine. We produce a 12-page color magazine. It's not just fluff, you know, because there are other companies that we also got solicited, pay us this and this, and they put a picture of you and a name on a cookie cutter. No, we did a magazine from scratch. You know, it cost us a bunch of money, and it has real photos of real customers, real stories, real content, not just content that we went to AI and tried to pull. No, real thing, and we send it to everyone. We initially designed this magazine to attract new people, and this is what we found out. It didn't attract new people, but when we send it to our existing customers, it produced more business.
Interesting.
So go physical. Go physical. Pick up the phone. Call out your best customers, even if you have nothing to say. Say, hey, this is Alejandro. I just want to reconnect with you. We haven't spoken in a while. And when you do this, when you send birthday cards, when you say 4th of July cards, when you do the magazine, when you call people, you know, when you find any excuse just to meet someone face to face, you know, probably the person says, you know what, I have nothing to say to you, Alejandro.
I have a 2.5% rate and 30-year fixed. What am I going to do?
Yeah. But if you want to have, tomorrow I'm having coffee, you can have coffee with me. Say yes.
Yeah.
And believe it or not, just by doing this, people will go, this happened to me too. You know what? I have all this debt. And then before coming to talk to you today, I was doing an analysis on them. And most likely we're going to use the Aspire product to help them.
Second,
That lead, that business, and you may say, well, it's a second, it's not much money. But you know what? You do a little second there, you do another little second there, boom, a first comes in.
Yep.
Then you get another phone call. Hey, Alejandro, you mentioned that blah, blah, blah. Would this work for me?
Yeah.
That's what I would do. And that's what we're doing.
That's huge. And it's the personal touch. It's the human touch that people have lost.
Yes.
Because they want to go the easy route.
And that's why the MLO is called mortgage loan originator. Yeah. Because, you know, when I started in this industry, I thought mortgage loan originator. Is that like a euphemism? Is that like a big word to just hide that you're just a loan guy?
Yeah.
And then after years, you know, I'm a little slow, I cognited originator. When you look at the definition of originator in the dictionary, that means creator of thin air. You know, because you can get a processor, you can get an underwriter. Once the loan exists
Yep.
and it's a real loan, it fits a bunch of people and a bunch of companies. But without that spark, without that originator that creates the thing out of thin air, nothing would exist.
Yeah.
And that is your job.
That is your job.
That is your job.
That is
your job is to create these loans out of thin air.
Yep. You got to find the loans. It's like fishing.
Yeah.
It's like hunting, fishing. I love that because you never really think about that word, originator. It's like just if you throw it away, it's like loan originator. And people don't even like to use that word. They say, I'm a loan officer, I'm a broker, I'm a finance, whatever it is, right? But if you, and even, I'm a believer in manifestation. So if you say, I am a loan originator, I originate loans, and you use that as like a mantra, I bet you if you did that 10 times a day, you would just, that just creates, we create things and our thoughts become things.
Yes.
Our words, become things. And if you say that out loud, I am a loan originator, I'm going to originate a loan, and that's what your job is. You got to have that mindset, right? You have to have that mindset of, this is what I'm doing, this is my job, this is what I'm going to go do today. And instead of just, most people, I'm an email, I just reply to emails all day. That's what most people do, right? But if you really take some time to think about, I am an originator, I am going to originate some loans today. And you go out and you do that. And you put effort and thought and your heart and your soul behind it. I think that's probably onto something.
You're onto something. And I'm going to tell you a very little story about that.
I love
that
it.
always surprised me. I always believe that cold calls do not work. And I try not to make them. I'm uncomfortable making them.
Yep.
But I never forget, years ago, I have this lady from Texas. I could not understand her accent very well. But she called me.
Because it was Southern?
Yes.
Okay.
But I picked up the phone call.
Yep.
And then she was so good. She was so genuine. She was not reading from a script. I knew that she was talking to me. Maybe she was reading from a script, but she did so well
But she did
that
it well.
I didn't notice.
Yeah.
She was from a lender. Lender also make cold calls to brokers.
Right.
And we became friends. She was from a lending company that now was sold. I don't remember the name right now. Just from that call, the few W-2 loans that we do, I started to send them to her. We became friends. She did an awesome job. She was like us. She really went all the way to make them happen.
Mm-hmm.
And until she ceased to work for that lender because the company went bankrupt or was bought or sold, we always sent her the W-2 loans.
Just because she cold called you.
Exactly. So that's why that taught me, hey, if you do this right, it does work.
Yep. I think your best opportunities in life come from people you meet. So why wouldn't you go and do more cold calling, do more cold approaches, talk to people in an elevator, talk to people at the coffee shop, just talk, just say hello, how's your day? Just spark up a conversation because you never know what that's going to turn into.
Correct.
And it's like buying a lottery ticket, right? Like the odds of you winning the lottery, if you buy one ticket, are so small. But if you bought 10,000, you're going to have a better chance of winning, right? Or anything you do in life, the more you do it, the greater your odds become of being lucky or being successful. And I think that's huge, and it's like a lost art. And it takes practice because, like you said, it's difficult to get out of your comfort zone and make a cold call. It's difficult to strike up a conversation with somebody, just cold approach. But if you just do it more and more, you get better at it. You practice. It becomes easier, just like anything in life, like music. If you practice piano, you get better at it. You get more fluent in it. And I think people are just missing the boat when they don't do that, and they just go through their days. And I think the phone and all the apps we have on the phone now have totally ruined the way humans interact, and
especially texting.
Right.
Texting is the new thing. But
well, you'll be in a coffee shop, and everyone's just sitting there on their phones. No one's talking to each other, and it seems almost rude to like strike up a conversation. But people crave that.
Yeah. Well, text.
It's fresh. It's a breath of fresh air.
Yeah, and I'm not saying that texting is bad because texting, emailing has a place.
Yeah.
But if you're going to talk about something meaningful, just call.
Yeah.
Because texting, by the way, I've tried to tell this to my clients over and over. Don't send me confidential information on texting. Texting is completely unsecured.
Yeah.
I read an article with $20. You can buy a device and look and eavesdrop at any text sent by anyone
Wow.
anywhere in the world.
Wow.
So bear that in mind when you
I
text.
did not know that. That's
Yes, $20.
Scary.
You go to electronics store, you can buy a device, I don't remember the name, and you can eavesdrop. All you need is the phone number. You can eavesdrop to any text because the texting protocol was done in the 70s. And at that time, nobody was envisioning all the security problems that we have today.
Yeah.
And
it's just like messages flying through the air, and you can just, I guess you create, it's like a radio signal, right? You just create something that captures it. And
it's because of the protocol. Texting goes through a certain protocol, and it's very easy to tap into that protocol if you have the correct machine.
I think iPhones are more secure though, right? Like the iMessages.
The iMessages, yeah, of course. The iMessages, Signal, secure. Telegram, all of those things are more secure. But I'm talking about regular text.
Yeah. Yeah. And a lot of people, I think a lot of people have iPhones, but there are those ones that, a lot of people don't too. So that's don't text important information, call or email it, right?
Yep. Even if you have to leave a message on a voicemail, in my opinion, from a sales perspective and a customer service perspective, that's a lot better than a text.
Yeah. Do you ever use voice messages, like voice text messages where you can record and send the voice message to the phone?
No, because in my opinion, they defeat the purpose. When you send an email, when you send a text, and this is my personal opinion, I can very quickly, looking at the text or looking at the email, read the information on a flash, get the information. If it's a voicemail, I need to pause, I need to click, I need to listen to the whole thing. And if I'm going to do that, I would rather call.
Yeah. Yeah, and then you have that interaction that is so important, You're creating more rapport, you're creating more relationship, which is so key.
Yeah. And I used to live in San Diego before many, many years ago. I love San Diego. And I started in real estate. And one of the first books that I bought was by Keller Williams. Sorry, Keller. I forgot his last name, but he's the founder.
He's part of the Keller Williams.
Yeah, he's part of the Keller Williams franchise, and that book was called the Millionaire Real Estate, the Millionaire Real Estate Agent. And the books you can still find it in Amazon. And I was reading through this book, and he had one paragraph that I never forgot. He said, the sale or the relationship with the customer depends on what he calls the number of touches. He said, every time you phone a customer, every time you see a customer, every time you interact with a customer, that's what he called one touch. Yeah. He says, you do 6 touches with the customer, now you have a client. So, 6. Yeah. 6.
And most people do 1,
6.
2.
6 phone calls, then you're on your way.
Right. I think people just give up too easy, right? It's like they don't have that grit anymore. So many people don't have the grit.
But this business is hard. This business of originating loans, even when you send an application, even when the loan is, let's say, you see that nothing could go wrong with a loan, just to babysit a loan, so it closes, that's a lot of work. Yeah. So no matter how you look at this, you're going to have to put a lot of work. Yeah. So why not doing it at the beginning, and then you have a lot of people, processors, and other people that can help you to babysit it. Right.
It does help to have those people babysit the other people that are working with you, helps you scale more. It's hard to just run a one-person operation. Yes. And that, I think, is part of the key to growing your success, is having people you trust that can help babysit the loans, that, they do something that you could do, but maybe you could do better, but you don't have the time and you can't scale if you do it that way. So getting a team around you is huge. Do you have a team?
Yes.
How many people do you have?
We have 6 people.
See? 6. Another 6.
Yeah.
That's great. And how long have they been with you?
This new team has been with me about 3 years.
That's good.
But they've made a big difference.
Yeah, that's huge. That's really good. Any other ideas of origination like that you have, that little tricks up your sleeve?
I would say the origination is completely personal, and the origination is not dependent on the interest rate. I would say that if you're a broker, if you're even a real estate agent, and you go, oh my God, rate is 7%, then it's going to be 8%, the business is going to die. Yes, there's going to be a slowing in business because the rate is higher, then the property becomes relatively unaffordable. Right. But just to take Southern California, we have In Southern California, just by itself, it's bigger than many European countries.
Yeah.
You have a whole country.
Right.
I mean, even if everything is going to shit,
Yeah.
you know,
Right.
you still have people that need a house, that need to refinance. You have a bunch of business owners that need the money.
Yeah.
So,
and business owners
once
always
you start,
need money.
once you start to see how many people, how many transactions, we're talking about hundreds of thousands of transactions, and you only need a little sliver of that pie
Right.
to do well.
Right.
So I would say, try to ignore the news.
Yeah.
Because all they're going to do is just bring you
Make
down.
you sad. Yeah.
And just think about the hundreds of thousands, and you only need a tiny sliver.
Right.
Go after it. Because if you survive this downtrend, because everything goes on a pendulum.
Yeah.
Now we're going over here. You know, that's the bad, let's call it the bad times.
Right.
You survive this, just time and impetus is going to get you to the other side.
Yeah. You got to have that hope and that optimism, right? To know that you're going to get to the other side.
Yes.
I think that's key about, when you get older, you learn like, okay, I got to save a little money. Can't just close all these deals and then just go on vacation, right? And spend it all. You got to have that, little rainy day fund, and you have to know that times get tough. And, I'm sure there's a lot of people learning that lesson right now, right? I learned it in 2008 when that huge crisis happened. Terrible. And this next, it's like, you just know it's going to happen. It's going to go up and down. It's going to go up and down. You're going to have those good months and those great months, and you're going to get that client that you just found because you were cold calling, or you were, talking to people in a coffee shop or wherever, restaurant, or you overhear somebody talking about something and you just sort of offer a little help or whatever it is. Right.
Right.
What's your biggest challenge right now?
To find a way to sustainably get new leads that works. That I would say is the challenge.
Yeah.
We are working on it, by the way. We have several ideas and we're working on them, and some of them have had relative success. But my mission, or one of the things that I want to do, I want to create a way to get leads, a way to spread our message across, to bring us the client that could benefit from our services. Because sometimes I get a call saying, hey, my mortgage rate is 7%. Can you do any better? And I say, you know what? We're not in that business.
Yeah.
I can give you other names of people that are in the discount, brokerage business, but that's not what we do.
Yeah.
And they always get very surprised. So we don't want just any lead. We want the lead that will benefit from what we can offer.
True.
That's the biggest challenge.
Yeah. That's good. I mean, that's a good challenge to break through. I mean, and I'm confident you'll do it, especially with what you're talking about, doing stuff that other people aren't willing to do. And I think when you have less loans, you're willing to work a little harder on each loan, and then that's what creates those clients for life, because they see how much effort you put into their deal, and then they want to refer friends and stuff.
And one last thing I would like to say to broaden your question, it reminded me, I trained on how to do commercial loans. And the mentor that I had when I was training to do commercial loans, he said, when business is slow, don't follow into the trap of just taking any loan request, because you go, well, I have nothing to do. So this guy's calling me. I don't know if he has a loan, but why not?
Yeah.
He said, the loan is not going to work. Leave it.
Yeah.
Use that time to promote, to refine your message,
to originate,
to find new ways to get to people.
Right.
He says that is how you need to spend your time, not taking loans that are not going to get you anywhere,
right?
Because they're duds.
Yep. Sometimes you just have to get up from your computer, walk or drive, go somewhere new that you haven't been, try to look at, the world a little differently, because we go through life just cruise control, right?
Right.
You are missing opportunities everywhere because you're just on your phone, or you're thinking about something and you're not looking around and you're not looking for opportunity. If you look for opportunity, you're going to find it, but you have to look for it. You have to originate. You have to put that originator cap on, and you have to go and get out of your comfort zone. I think that's probably the best advice that I'm learning right now, even just live right now. Like, it's just a reminder, right? Because we all know it, and then we just get lazy or we get complacent, and then and then you're like, gosh, how did I get here? Well, because I haven't been originating.
Right. That's the key word, originate.
Right. I love that's the word of the day, originate. Go look it up on Google, right? Like, and see and do the definition, and maybe even print it out and put it in front of you, and to remind you that's who you are, and then just say it out loud. It's crazy how we've lost that.
Yes.
And I think that just that alone will bring you business. Just doing that. What is a failure that you've had that's led to a good outcome?
Well, I would say that the failure did not happen so much in the loan business. It happened when I was a realtor. At the very beginning, I was chasing a certain commission. My girlfriend would say, how much are you going to make on this deal? Mm-hmm. And I would take my calculator, well, I'm going to make this much. And that sounded like a big amount of money.
Oh, yeah.
And then over and over and over and over, it didn't work. So I made a policy for myself. When I was a realtor, I said, I'm not going to calculate the commission. The only time I'm going to even look at how much of a percentage I'm getting is when we're in escrow and everything looks good that we're going to close. So my girlfriend then starts to ask me, how much are you going to make? I said, I don't know. And she says, how come you don't know? You should know. Yeah. I said, no, I don't want to know.
Yeah, I don't want to know.
And
put my head down and keep working.
Yeah, and that was the only time that I was successfully able to get the deal, put it into escrow, and close it when I did not look at my commission.
That's so good. It's great advice. I mean, someone told me one time, don't ever tell your significant other, your spouse, your girlfriend what you're going to make. Don't tell them what your pipeline is, because, not only do you start spending that money in your head, they do, and then you get in trouble, right?
But the other thing that happens, because I went through this too, is the stress. You see, you and I, we're in the edge. Yep. You and I, we know that we can originate. Yep. So even if, let's say, we have no loans right now, we know that it's a matter of time before we call or somebody calls us or whatever, we get a lead, we explore the lead and we get a loan. Yep. But your significant other doesn't know. No. She may not be sales-oriented. Right. So she sees your pipelines, she sees nothing. And then she sees the bills. And then she starts to worry. So the stress to your significant other is terrible. And then she comes to you and say, hey, Jon, how come we don't have any loans? And you in your head,
it's negative energy.
Worry because you know that you're going to get the loans. But because you can originate them. But she can't. She's not in that business.
And that stress and that worry and that negative energy just compounds and it brings you down. Yes. Yeah, it's good advice, because you can't spend your commissions or count your chickens before they hatch. It's the worst thing you can do. Yeah, that's a good failure story. Any habits that you have that contribute to your success?
Yeah. The habit is to have a schedule and keep the schedule no matter what. Even if, I start my day at 9:30, which is a little late in this business because people start at 8, but I'm sort of a late guy. Yep. So I start my day at 9:30. Even if I have nothing to do, even if I have no calls to make, even if I have no emails to write, I always do that. Yep. And it's never failed, because the lead, the email, the opportunity comes. Yep. And when it comes, I'm ready to take it.
That's good.
Even if I'm not at my computer, even when I'm traveling, I consider myself that I'm on actual duty, like on duty. Yeah. At my 9:30, my own duty begins.
Your work day, yeah.
Yeah. So that is a habit that has helped me a lot. Another habit that has helped me a lot, especially in this business, when we handle a loan, it's not just a loan. I never counted it, but it must be probably 150 to 200 things that you have to do one after another from loan beginning to loan end. Right. And that's not even counting if you work with the borrower before to get to the loan. You see what I mean? Yeah. So when I'm working on a file, one of the habits, and I did not invent this I copied from another successful person, is that I do on that file everything that I can do on that unit of time. So if I'm working on the file and I have to call my processor, I need to send an email, I need to check the rate sheet, I need to write to the underwriter, I need to do something, or I need to call the borrower, I do everything. I don't do one thing, then make another phone call, but then work on something else and come back. No. Every unit of time is spent doing as much as I can on that file on that day. Yeah. Then I can put it away, and I know that don't have to touch it for another 2 or 3 days.
That's good. Yeah, it's having follow through is kind of what I'm hearing. Is you got to follow through all the way to the end. Otherwise, it just gets left kind of undone. And
yes, and also I don't know if you notice this or you ever notice this phenomenon, but I noticed this phenomenon. It's very funny to me. You get the loan done, the loan is in progress, the loan is going well, all the conditions are satisfied, and the loan is coming to the end. It's coming to the time where the borrower needs to maybe wire the final funds. It's the time where it's going to be done.
Yep.
And then it stalls. Everyone is like relaxed. Everyone, when I say everyone, meaning the processor, the underwriter, the borrower himself, herself, is waiting for someone else to do something.
Right.
Because everything is almost done.
Right.
I noticed that as a loan officer, that's when you need to intervene to avoid a catastrophe, and to call the borrower and say, hey, did you wire the money?
Yeah.
Well, I don't know. I was waiting for the processor to call me.
Right.
Call the processor. Hey, did you do this? Well, I was waiting from escrow to send me the paperwork. Then you call escrow. No, I'm waiting for the...
I got 10 other loans I'm working on.
No, I'm waiting for the processor to send me this paper. Yeah. It comes this lull before the close where nobody does anything.
Right.
And if you don't intervene aggressively and quickly, the loan is going to fall through.
Right. Yeah.
So that's another habit that I developed, that when the loan is coming to the end, I become extremely alert and suspicious. And I start to bug everyone. Right. Hey, did you do this? Did you wire the money?
Yeah, that's a good anxiety to have, I think, is to be hyper aware of what's happening on your deal, because you have to see it through. You have to finish it. You have to get it across the finish line. And nobody cares about a loan as much as you do, because you're the one that's going to make the most money. I mean, maybe the borrower, if they're getting a lot of cash or they're closing and they really care, right? But no one else, the underwriter, the escrow officer, funder, they have a bunch of other loans and they're not making near as much money as you as the originator are going to make. So that's our job. That's to care about the file and not and actually expect that no one else is going to care as much as you. When we started FundLoans, I really wanted to create a company that did care as much as you. It's still impossible to care as much as the loan originator, but if we can get close to that, to where you feel like we care about the loan as much as you do, then it's a magical thing, because like I said, no one else cares about the loan as much as you.
Correct.
So you have to kind of babysit it.
And the expectation, you need to work so much to create a good expectation on the borrower. Yeah. And you only need a little slip for that expectation to die and turn into negative territory now.
Right. And then they don't want to refer you any business.
Correct.
So that's the key point, is when it's about to get done and you help push it along. And then what do you do when the deal closes? What's your go-to deal?
Now we have a whole process. After the loan closes, I have my wife call them, because I don't want to be me, to do a quality control check. She asks 10 questions. And she basically says, you can tell me whatever you want and don't worry about Alejandro. He's my husband, but I don't take anything personal. Yeah. Just tell me. And she goes point blank, asking, how did we do? What could have we done better? Nice. Any problems that you encounter? And so on. Then we send them a little something. We got into a lot of trouble with the compliance guy, because he said, we hire an external compliance person. Mm-hmm. And he says, you cannot send them anything of value because of the RESPA rules and blah, blah. So we navigated that process and found something that is not big on monetary values, you know. So we send them something. Okay. And then we put them on a mailing list. And then we put them on our birthday reminder, mm-hmm. So we have a whole process that we do as a follow-up.
That's good. That's key, because so many people don't do that. And then that client goes off to someone else.
Yes.
But you can keep that client in your kind of your data, not just your database, but your clients for life. If you do all that follow up, and that's key.
Yeah.
That's how you get repeat business. That's how you grow your business to where it just sort of goes over that tipping point, and then you start getting calls, and you just, for someone who's only been in the business a year or two, if they do that kind of thing, I remember a point in my career when that just happened. It clicked, and it was all of a sudden I started getting calls or emails, referrals, and it just was like a magical moment. But you have to do all those things to get there.
You have to get to the critical mass that now your amount of client is such that now you start to get all these calls.
Right.
But to get to that critical mass, is where you need to put all the effort. I always tell people that are sort of new entrepreneurs that the curve of entrepreneur, and it's the same on this business, it's a little bit like this. You work, time goes by, you work, nothing happens, you work to work. Now here you start to have doubts.
Yeah.
Why I'm doing this? I've been working for such time and nothing is happening. And that's the point where you need to continue to push, because this is going to happen.
Yeah.
And I call when it starts to get like this, that's what I call critical mass. Because once you're here,
it seems
all
like
that
the hardest
effort,
part too. It's the hardest point, and that's when you have to push through.
Yep.
I always like to look at it like a rocket, right? The rockets, when they take off, they use up so much fuel.
Yes, and
But then
they go really slow at the beginning.
Yeah, and then when they get that momentum, it doesn't take as much effort, but you use up a lot of fuel in the beginning when you're getting off the ground. Anything you do for fun? Talk about that. What's your go-to to?
Well, I like many things. So I like reading a lot. I like going to the beach with my wife. I like traveling, and I like learning a lot.
Yeah.
Not just on this business, but of pretty much of anything. I like to read about the mind. I like to read about the potential of the human soul. That's my passion. And I like to also, I help on my local church. Sometimes they have people that I need help with, and I help them as a counselor. So that's what I do for fun.
That's rewarding. Yeah, that's cool. That's really cool. You got to have something that you do to blow off steam and just sort of recharge your batteries, just feed your soul, right?
Yes.
Yeah, I love that too. I love travel and seeing new places. I have like this thing where if I don't have, and I get upset because if I don't have the amount of countries that I've visited for my age, I just get like stressed out. So I'm just really close right now. I'm like 2 down. So I gotta travel a little bit more and go see some new countries, which we're going to do this fall. And but you have to do that kind of stuff.
Yeah, and then one thing I want to add to that may help other brokers listening to this, or sales agent or realtors, is that when you've done your best, you've done all your cold calls, you've sent all the emails, all the texts, and there's nothing else that you can do, and nothing is happening. Yep. That's the time that if it was me, I would step out of the computer, I will go to a park, I will go to the beach, I will go out with my wife to get space.
Yeah.
Because once you did everything you could, all you need now is space, mental space, for the stuff now to coalesce and come back to you. But if you are on the computer and you're worried and you're in that state of mind, nothing is going to happen.
Yeah. There's a point where you've done enough.
Yes.
And you can't do any more. You just have to step away.
Correct.
Yeah. And just get some space, like you said. That's good. Any shout outs to anyone that's helped you along the way?
I would shout out to my mentor, Ernie Farhat, my real estate mentor, my amazing mentor. I worked for him for 10 years on the west side of LA. He taught me everything I know about real estate. He allowed me to sit in front of him every day while he made his calls for hours and hours and hours. He gave me the most difficult and shittiest jobs to do. And I'm glad that he did, because that's how I really, really learned. Yeah. That had nothing to do with loans, by the way.
Yeah.
But that showed me how the commercial world works. It showed me how the legal work of title works. And now that's how I could do that loan.
Yeah.
Because working for him, solving title problems, looking at all these arcane documents, written in like an impossibly to understand language, and he helping me, teach me these things. That's how I could do those complicated loans. So
that's cool.
Shout out to Ernie.
Yeah, that's great. You have to have a mentor, I think, and someone that you look up to, I think, is key, is huge. Even if you don't have people like that in your life, you can find them. Right? You can totally find them. But I think that's helped me too, having a mentor and just someone that you can.
Can I ask you who's your mentor?
Yeah. Oh, my mentor. Probably my father. And there's been people along my path that have totally helped me as well. And I'm in a group now called EO, which is Entrepreneur Organization. And there's a lot of peers there that have, they've been where I'm at in my business stage, and then they've sold companies, or they, have had multiple different businesses. So I have a group of mentors, actually, peers that I rely on with that. So
that's awesome.
It's great to put yourself in groups of people who are smarter than you, who also have more experience than you. And I think, they say, what is it? The the 5 people that you hang out with, that's who you're going to become, right?
Yes.
So that's cool. Man, this time flew by. It went really well, and appreciate all your insight, and thanks for coming on.
No, thank you for having me, John, and it was great to see you again.
Yep. And how does someone find you if they want to reach out to you?
The best way is send me an email, or you can call me. Let's talk about phone calls.
Yeah, call them.
My cell number is 858-531-7967. Or if you're a little bit shy and you want to send me an email, it's Alejandro, ALEJAN, D as in David, RO, at prosperitylending.us.
Nice. Awesome. Well, check out. Do you have any social media that someone could follow you on too?
Yes, I'm in LinkedIn. I've been in LinkedIn forever, so you can find me in LinkedIn. My wife put me on a Facebook group, so you can find me there if you like Facebook.
Mm-hmm. Great.
And those are the 2 places that I'm usually.
That's awesome. Well, cool. Thanks for coming on. And guys, you're listening, please share this with your friends. Share this with other people you think would like our podcast, and help us grow. And so we can continue having guests on, and we're here to just help people and help them, with their business. So thanks for contributing today.
Thank you, John.
Yeah. See you guys on the next podcast.
The $1 Million Mortgage Experience Podcast.